What does the Omaha real estate market look like as we move into the month of February? Well, in today's video, we're going to look at the Omaha real estate market for the month of February, and we're going to get started right now. Let's get things started by looking at the current inventory. Currently, we have 1,064 active homes on the market in Douglas and Sarpy County. If you break that down between existing and new construction, we have 303 existing homes for sale and 761 new construction properties. Our inventory was down 14.9% compared to last month. Many people who are bearish on the housing market were predicting an increase in inventory along with a decrease in home prices. Last month, I took a poll of my viewers and 59% thought prices this year would be going down. 16% thought prices would increase, and 25% thought prices would remain the same. What I am seeing in the marketplace is an uptick in activity. I've spoken with a few builders and their activity was up substantially as well. A few builders have also said they plan on raising prices this spring. If you are considering building a new home, now might be the time to take action. I suspect many of the incentives will go away if activity stays up. You may want to have that conversation now with your builder versus later. Be sure to bring your agent on your first visit. Remember, anytime you're buying new construction, it's good to have your own agent. If you're buying an existing home, sellers are now receiving multiple offers below that $300,000 price point. So if you're thinking about new construction or if you're relocating to Omaha, Nebraska, my name is David Matney with Nebraska Realty, and I'm a local agent here in Omaha, Nebraska. If you need any assistance to help you make a smooth move to Omaha, my contact information is in the description below. If you like this content or if you want to learn more about Omaha, be sure to subscribe to the channel and ring the bell for notifications. Let's look at the numbers for January for Douglas and Sarpy County. Last month, we had 495 closed sales for the month of January. 411 were existing sales and 84 were new construction. The median closed sales price last month was $280,000 and the median days on market was 9 days on the market. How does last month compare to January of 2022? In January of 2022, we had 716 closed sales. 576 of those were existing homes and 140 were new construction. The median closed sales price was $244,750 and the median days on market was 3 days on the market. Home prices were up 14% compared to last year. However, the number of sales were down 30.8%. Now let's talk about interest rates. Interest rates are currently at 6.45% for a 30-year fixed rate mortgage. A year ago, interest rates were at 3.73%. Interest rates have come down from a high in late October and early November of just over 7%. Rates have come down and many buyers are coming back into the market. I think what you're seeing in our market is that buyers have adjusted to the higher interest rates and they're coming back into the market because of the incentives, higher rent prices, and less competition. What about jobs? Unemployment numbers were up from a year ago in both Douglas and Sarpy County. Douglas County has an unemployment rate of 2.6% versus 2.2% last year. In Sarpy County, unemployment jumped from 1.7 to 2.2%. Jobs have a significant impact on the real estate market. If a person loses a job, it takes them out of the real estate market. In the past 2 months, we've seen unemployment numbers increase in our area. However, both Douglas and Sarpy County are well below the national average of 3.3%. When people think about job losses, they start to think about foreclosures. I want to share a resource for foreclosures, and that's called HUDhomestore.gov. Now, if you go to HUDhomestore.gov and click on Nebraska, you can see we have one listing in the entire state. That one listing is in Potter, Nebraska, in the western part of the state. Another place you can search is the MLS or Multiple Listing Service for REO properties. REO stands for Real Estate Owned or Bank-Owned Properties. Just to give you some idea of our market, we only have 5 listings on the active market in Douglas and Sarpy County that are bank-owned properties. So if you see a YouTube video from one of the Crash Bros talking about an increase in bank-owned properties up 40%, in Omaha, that means we went from 5 bank-owned properties to 7 REOs. Those channels are just trying to sell the click. What about the cost of lumber? Lumber has moved up from last month and is currently at $470 for 1,000 board feet. A year ago, it was $1,135 for 1,000 board feet. We've seen a significant decrease in the cost of lumber. Again, this helps both buyers and builders. Now, last month, we've seen lumber move up, which I think is a positive sign for the new construction market. It shows demand for lumber is increasing, which means builders are out there using that lumber to build homes. Another thing I want to talk about in terms of new construction could be a little bit of a leading indicator of our real estate market, and that is looking at the stock price of D.R. Horton. D.R. Horton is the nation's leading home builder. They build over 80,000 homes per year in a variety of different markets across the nation. The stock price is up 27% in the past 3 months. To me, this says that investors are bullish on the building sector. If you want to learn more about the pros and cons of building with D.R. Horton, I'll include a link to a video in the card above. Another sign that the market is moving in a positive direction is the Crash Bros. If you're not familiar with the Crash Bros, there are content creators on YouTube talking about the impending doom of the U.S. housing market. Lately, I've noticed more of the Crash Bros talking about individual specific markets, or they talk about false narratives pushed by real estate agents. It's good to take in information from a variety of different sources. Should you take purchasing a home seriously and exercise some caution? Absolutely. But don't take financial advice from somebody off of YouTube. You got to do what's right for your individual situation. Should you wait for interest rates to come down before you purchase? Many of the experts out there are predicting interest rates will continue moving downward to around the 5 to 5.5% range. Now, if this is the case, since rates are now just over 6%, should you wait for rates to come down before you purchase? Consider this. The media is usually behind the power curve. The media is now reporting on the market we were in late October and early November, and the number of sales were way down and all sorts of incentives were being offered. Activity is now up. Buyers, especially below that $300,000 price point, are back to multiple offers. Rates have come down from a high in November, and buyers are now growing accustomed to a 6% interest rate. Buyers who are waiting around paying more and more in higher rent are going to get tired of waiting and come back into the market later on this spring. If you buy now, you have less competition. If you wait, you're going to have more competition, and that's going to help drive up prices. If rates do come down in the future, then you could refinance your current loan. If you wait, you might be competing against more buyers and paying a higher price. Nobody's going to know the future. You got to do what's right for you.